Good morning, everyone. Welcome to another week. Welcome to your Monday morning update from UTG. I am Ads, and thank you for joining me. Just put the header on so you guys know what I'm talking about. So BTCUSD, haven't had too much to go off over the last 2 days, over Saturday and Sunday. Really just descending still. So after we did get respected on this demand zone late last week on the 4th of September, and again subsequently on the same day, over the weekend we've had another go at this level. Admittedly, quite significant go at this level now. And to be fair, this level isn't of any, it's not the highest quality zone is what I'm trying to say. On the left-hand side here, you can see that it's just formed on a market pause, really, in the middle of this move all the way to the upside, whereas we've got the CME gap just underneath it, and I've highlighted that with another demand zone just under there. My thoughts with BTC right now fall in the lines in the way of we've come this far. You could probably expect the gap to be filled. It would probably be a good idea to, if you were averaging in or putting orders in this market, to maybe put them above, or start averaging in from this 10,000 area, or even the 9.8 area, if you were averaging into this market for maybe a longer term swing position, because we have formed a very, very nice level of supply at this 12,000 mark now. So that would be a decent area of interest for a swing move, back to the upside, given some volume and after we trend back towards there. But it would be a very, very good idea not to just slap your orders in the middle of the CME gap and hope for the best. Yes, statistically they do get filled, but however, it would always be nice and always be a good idea to account for front run on this area, because it would be a perfect opportunity. Everyone, or all retail traders, are expecting this gap to be filled, and more than likely it will. Don't get me wrong. However, it would be a fantastic opportunity for the big guys, institutional traders, professional traders, whales, everything like that, to really just fall short of the mark before a swing back to the upside. I could be completely wrong about that, and we might fill the gap, which is statistically very likely. But just account for that if you're averaging yourself in. If we don't hold this area, however, if I move to the daily time frame, there is that, oops, get rid of that. There is that gap there at 9.6, which is very, very nicely outlined with that candle just there on the left-hand side. However, there's a lot of liquidity underneath it. So I've used this candle here. It's not the greatest of zones. It is quite poor, but the higher quality zone would be down here at around 8.8, which is the zone that we spoke about in the Discord and in a lot of the live sessions while we were still in this liquidity area. So if we do, fall straight through that CME gap, that 8.8 would be the most likely scenario if we're looking at a daily time frame, macro scale demand and supply strategy. So 8.8 would be where I would put it. We've got the retest on the left hand side. It does fall very much in that 61.8 fib extension level from the swing high to the swing low. I haven't moved that just yet. So pending the break of that 9.6 gap, we could see, or that 9.6 supply rather, because it is, demand, because it is a demand, as well as a gap. It would be an idea to look at that 8.8 level. But however, that's going well further on in the future. We're really looking at this play by play, and the immediate term would say that 9.6 CME gap would be, the overall area of interest. The overall area of interest for most of the market. Most of the market sentiment is around this CME gap. And like I said, accommodate your trading style for that. If we just fall short and then make that reversal, or even make a lower low there and continue to move to the upside, even if we test some of these fib levels after we do something like this, it would be very, very sad, or it would be disappointing would be the word I'm looking for, if you've got orders layered in this level and we don't even make it there because the market makers are playing games. So accommodating for that would be the best thing. That's in my opinion anyway. It's not financial advice. That's really all with BTC. We'll have a look at the dominance chart. I'll flick over to the BTC dominance chart. And we did end up making it, or we just about made it to that lower 58% level, which we could still do. Looking at the daily time frame, which we were having a look at over the course of our Tuesday and Thursday nights, we've been really coming down and respecting this level on the way down there. Not too much to go off. We have had a decent bounce off the 61.8 fib extension, and I'll get rid of this demand there now because it is toast. But we are seeing this still in a descending structure. Going off this trend line and closing below once more. I know we have made a lower low, and then we have double topped here. If I zoom into the smaller time frame scale, you'll be able to see that a little clearer. There you go. There is a significant double top scenario happening at 62 on the BTC dominance chart, while falling back into that falling wedge pattern. So if we do end up getting back down to this 61 Fibonacci level again, it would be quite interesting. However, the main level that I've always been looking towards for the BTC dominance chart would be 58. And if we do get there, if we do, slowly come down and test this level, probably won't look like that, probably something like that, then it would be pretty fruitful for the alts to make some sort of moves. And if we do have some sort of that scenario occurring, then it would say BTC would be quite stagnant and moving to the right hand side of things. So just look out for that. Although, look, it's just pure speculation on this sort of chart because it's just a BTC dominance, it's a market cap chart. It's not wise to base your entire strategy off this chart and just use it as a rough guide on what things are doing, because obviously you can see the price action is fairly stagnant. There's a lot of wicks and a lot of movement on this. The last one I'll have a look at this morning is the DXY. DXY is obviously the global reserve currency. It measures the strength of the US dollar at any given time. This is a regulated financial market, so this is not financial advice, just my ideas and opinions. So what we've been looking towards with the DXY is this level of supply here at this 93.2, where we've eaten through pretty much all of it, to be honest, in the subsequent candles and the candles previous to it, while we were forming this downtrend. And it's interesting because we did have a rejection or a fake out here at this 92.7 level. We had this liquidity area to the left hand side, which you can see just here, and this crossroads is what I call it, with the downtrend as well. So it was quite interesting to see it get rejected there after we closed above it once, and then we moved back through it. Excuse me. But moving through that, we have had a tweezer top rejection again on this supply, and we did close again below it. And on the weekend, we were butting heads against this 38.2 level, which we've closed underneath, which the market has opened this morning underneath it again. Honestly, though, it is quite resilient at this point. We are trending very, very close to this trend line. We are trending very, very close to this liquidity 38.2 area. So it would be my opinion to see this back up at this 93.2 supply again to make some sort of decision on if we're going to double top there. Looking at this sort of scenario here, double top, which I'm talking about that. Or we smash through it and head back up to this 93.8, which is a little bit of a better zone. It's a little bit higher quality. It is still within a trend, so it's not the best pivot point, but we have some form of respected price action there to the left-hand side. We really need to wait and see what goes on, between tonight and tomorrow night. Obviously, being in Australia, being in Melbourne, Tuesday night is the night that you want to look for, with that brings the most liquidity, brings the most volume into the Forex market. So I'm not going to call anything right now. The only thing I'm looking for is looking at this supply once more, and we'll have another look again on our Tuesday night stream, which will be tomorrow night at 7:30 p.m. If you haven't already, check out unitytradinggroup.com. Check out all the indicators and stuff that we've got. Premium, Professional, the Trading Journal, and the Steamroller indicator are very, very popular. And moving back, if you haven't already, join our Discord and make use of the fantastic and wonderful community we got inside there. That's all for me. Like, subscribe to the channel if you haven't already. It helps us out a lot, and we'll see you tomorrow night.